Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning, everybody. Welcome to the morning brief. Today is Thursday, February 2nd. So I am planning on doing a video over the weekend that will go into much greater detail as to why I do what I do, what I'm looking at, why I'm looking at it every morning. Had one of my clients say, "Hey, I don't even understand what you're talking about." So I'm going to try to make an effort to have a special video over the weekend that will explain exactly what I'm looking at. So good feedback. That being said, today we had a ton of red numbers. Great Britain had a bunch of red numbers. Bank of England monetary policy summary, official bank rate was raised by 0.5%, in the Bank of England. All of this has already happened. The Challenger job cuts was quite interesting. Year over year, 440% increase in job cuts. That's not really a good thing at all. European numbers as well, main refinancing rate. Also, remember that the ECB was out this morning. They also raised by 0.5 point. And, they're being a little bit more aggressive than the U.S. U.S. yesterday, the Fed only raising by 0.25%. U.S. unemployment claims were less than expected, 196 versus 183. This is good news, but the market will probably interpret this as being bad news. The unemployment claims going down instead of going up, which means that employment is super, super strong. Preliminary unit costs, labor costs were less than expected. Preliminary farm productivity was greater than expected. These are both red because they were that's not good information. ECB came out at 8:45 with a statement. And further in the day, we have U.S. factory orders and then more information from the ECB President Lagarde, natural gas inventories, and that's about it for the day. So pretty heavy-duty day for news today. Here on the daily chart, you can see that we had a bear flag pattern which did not break down like it should. We had a bull flag pattern that then did break out and kind of established another little sideways band here, which we have now broken out of, and we're going to gap up. The next thing on the docket is this high over here from December. We can test that high, get through that high, have a close above that high. That would be a higher high. And anytime we have a higher high, that's a good thing. If we start scrunching this up, you can see that once we break that high right there, then we have several higher highs going all the way back into October with this high and a higher high, then a higher high, and potentially a higher high. So that's and you can see obviously higher lows all the way along. So all good information to absorb. So we're watching that level right there, which is 4178. 4178. If we get above that, we could easily go to that low volume node of 4205. 4205, which is also that little high right there. Amazing how that works. On the downside, if we should get going to the downside, I think we'll test the top side of this box here, which would be around 4109. That's kind of the boundaries that I'm looking at for today. Let's take a look at the inventory. So I'm going to go into detail exactly what this chart is saying, what the components are, and what they actually mean. in the Saturday video, so look for that. But basically, yesterday we had the Fed come out, right, I guess right there. The Fed's at 2 o'clock, so the Fed came out right there. Right there, the market loved what? No, right there. The Fed came out right there. The market loved it, and buyers came in. Inventory went up. Everything is correlated. So up inventory, up price. Everybody's happy. This is just confirming what the Fed's doing. Everybody jumps on board. Yay! Big crowd following thing here going on. Today, gapping up again, and inventory is up as well this morning. So remember, the whole purpose of this chart is to see divergences, seeing what we think should happen but doesn't happen. That's a big, huge red flag. This action here and this action here are correlated, so there is nothing wrong. The market is behaving as expected. So yeah, it is what it is. All good. Taking a look at the inventory, or I should say the daily chart here. Some confluence on the resistance side, 4180. If we get above that, 4195, 4200 will also be a round number that'll be of interest. On the downside, we have a little bit around 4141, some more support around 4130, and 4109 are the numbers I'm looking at intraday. The Stock Traders Almanac, which is a publication that gives us good historical probabilities. The historical bias for today is 57.1% chance the S&P 500 will be up today, 57.1 historically. And so that's always good to know, help you develop a market bias. That being said, I hope you have a great Thursday. This is my last day of computer classes. Thank goodness, man, I'm telling you. I'll see you tomorrow morning, Friday, last day, and I hope you have a great day today.